Misplaced Faith in China's Economy by www.options-trading-education.com. According to Bloomberg Business, China calms jittery investors with a clear message and Yuan stability. We believe that this represents misplaced faith in China's economy. Chinese authorities seem to finally be getting through to investors after months of confusion about the nation's economic policies which helped drive a $9 trillion global equity rout. Recent moves, such as ruling out the possibility of a one-off Yuan devaluation, a new head of the securities regulator, and an increase in the money available for lending, appear to be winning back some confidence. Fresh data on Tuesday showing a further slowdown in the world's second-largest economy barely made a dent in a broad market rally. Until 3 weeks ago, such a signal probably would have sparked a sell-off. We panicked about China for much of this year, Michael Metcalf, global head of macro strategy at State Street Global Markets, a unit of the world's largest money manager for institutions, said on Bloomberg television on Tuesday. The market is just beginning to regain some faith, perhaps in policy. Our opinion is that investors already expected to see declining Chinese growth and had already discounted that as fact. Clear explanation of economic and monetary policy is reassuring to markets, but just where is the Chinese economy going? On our sister site, Profitable Investing Tips, we asked, what will $28 trillion more debt do to China's economy? China now has surpassed the USA and Germany as the nation with the most debt. This is likely to be an anchor that pulls down the Chinese economy for years to come. China has replaced the USA as the focus of too much debt compared to its gross domestic product. In the last 5 years, Chinese debt levels have accelerated as its economy has slowed. In short, what will $28 trillion more debt do to China's economy? Business Insider writes about China debt to GDP. China's total debt is about $28 trillion, larger than that of the United States or Germany. Now the Chinese economy is slowing, but China hasn't stopped adding more debt. About 5 years ago, Chinese debt levels began accelerating far faster than GDP was growing. In other words, as time goes by, China adds more debt and becomes less and less able to pay it off. A good portion of Chinese debt is in state-owned enterprises or local government. The general consensus was that this debt was China's problem and would not affect anyone or anything else. However, that has changed. Yesterday, the Chinese government again began buying stocks to prop up its plummeting stock market. No one thinks that is sustainable, and my colleague Lynette Lopez noted yesterday that there is a capital flight, doomsday scenario being floated by BAML, which suggests that China only has about a year to a year and a half of currency reserves on hand if it needs to defend a run against the Yuan. China's debt is not just going to disappear by printing money, as a lot of China's business debt is denominated in dollars. So what will $28 trillion more debt do to China's economy? The point is that China's economy will be growing at around a 3% rate by the end of the decade, putting it on par with North America and Europe. This is not spectacular growth of decades past, but more realistic over the long term. The danger for China is the habit of propping up growth by increasing its debt burden. That could backfire and lead to a significant depression in the land of managed capitalism. That is why we think there is a misplaced faith in China's economy. For more insights and useful information about options trading, visit www.options-trading-education.com.